Good morning, everyone. Welcome to this session of weekly technical analysis and market analysis brought to you by Oxshare. My name is Jimmy Jabour, and first of all, we're gonna see what we have as news this upcoming week, and then we're gonna jump in right to the charts to analyze some currencies, some commodities, and some indices. First of all, we're gonna check out the economic calendar that we have for this upcoming week. So this is Monday. I guess Monday we had the CPI for the Eurozone. It came out as expected, no big changes. Tomorrow we have the interest rate decision for the Bank of Japan. This could be huge for the Japanese yen. Uh, then we have, let's see, no big news except this. We have the current accounts for the New Zealand dollar, and we have the CPI for the Canadian dollars plus the housing and building permits for the USA. Then we have on Wednesday we have the CPI for the United Kingdom. This will have big implications on the British pound. Plus we have the PPI as well. So big Wednesday morning we have for people trading the pound. As, we should take into consideration we have big news coming out. Plus we have the crude oil inventories, and we have the FOMC. So the FOMC is on Wednesday. So we should uh, uh, we should be careful. We have the Fed interest rate decision, which is there is slow, and low probability of cutting interest rates in this upcoming meeting. So expectations are at 5.5%. No interest rate cuts now because we had inflation data coming out last week, and we have inflation increasing a bit, and we are still far away from the Federal Reserve target at 2%. So most likely the interest rate will be at 5.5. Then on Thursday we have interest rates for Switzerland, and then we have the PMI for the Eurozone, and for GBP we have some interest rate decisions as well from the Bank of England. Most probably we're gonna maintain this rate of 5.25. And then we have the Philadelphia manufacturing and initial jobless claims. This could be huge. So we have a big week ahead of us. Existing home sales could have an impact. PMI for the US dollar as well. So yeah, as well as the balance sheet for the Federal Reserve. Uh, this also will show how much liabilities and assets the Federal Reserve have, and this could impact liquidity in the markets. So big news on Wednesday and Thursday. Then on Friday we have the retail sales for the British pound coming out at 9 Beirut time. Plus we have Jerome Powell speaking at 3 o'clock. So yes, big news coming out the last 3 days of the week. So we have Wednesday, Thursday, and Friday high impact news, and we will see some volatility in the market. Regarding the interest rates, I think we're gonna maintain the 5.5% from here on out until we see a decline in inflation data in the upcoming reports. Now let's jump into uh, the market. So we'll go first of all. We're gonna see the dollar index. So as you can see, we've been talking about this gap for 3 months Exactly. So yes, we filled this gap, and then we retraced a bit over here. Of course, I don't think this is a break. This is a change of character, or we are turning bearish for fundamental reasons. So we won't we won't cut interest rate anytime soon, and this is why now when we jump in to the gold analysis, we're gonna understand why we have this decline in gold prices. So I don't think this is a change of character. I think we rebalanced this gap over here, as you can see. So we filled this gap, rebalanced it, and then we pushed to the upside with this big candle that you see over here. So unless we cut interest rates, I think the dollar index will keep on rising, and the clear target will be at the 104.5 level at these relative equal highs over here. So yeah, I think we're gonna push to the upside, maybe retest this area. Maybe we'll have something like this. We retest and then we push to the upside, taking these liquidities over here. And then maybe after this, some data inflation reports will come out. If data shows that we had a decline in inflation, we can expect a reversal from this point for the DXY, because investors will anticipate a cut in interest rates to match the decline in inflation data. We should keep in mind that these data are lagging indicators, meaning that they do not convey the right image. Uh, so we might wait a little bit more than the inflation data coming out to see a reversal on the XY. That meaning, what I mean is that we can see a retracement, consolidation a bit, and then we push, and then we consolidate above these levels for some time before the real data comes out, and we'll have a decision upon hand. Either we push to the upside, taking out these highs over here, or we come back down to these levels if inflation data shows some promising results. This is related to the XY. We'll jump to the Euro USD. So as you can see, uh, we've been in an uptrend since February. Uh, yeah, let me see what we have on Euro. Yeah, as you can see, this two standard deviation line, the blue line, has shown a dynamic support. We keep on touching it and moving up to the upside as long as we are uh, in this area. Let me show you where. As long as we are in this area over here, under the mean, we can assume that we are continuing in a uptrend, but not a strong uptrend as we would like, unless we break above it, and that would show an increase in momentum, and yeah, an increase in momentum, and that could take us higher, depending exactly on the inflation data in the US, most certainly. For the meantime, if you want to go lower, decrease the time frame a bit. So you can see after this big break of structure over here and push to the upside, we had at these levels. I want you to remember this candle. Okay, I want you to remember this candle. this candle, we're gonna jump to lower time frames. We'll see the 5 minute. Okay, so this is the candle over here. This is the zone that the push came from, and we broke structure over here, and then we continued pushing up until we revisited these levels over here. We liquidated these positions. These buy side positions that are located over here has been liquidated, and the real demand zone have been hit. Now, on the 5 minute time frame, we have these areas over here that are considered a supply zone for the 5 minute. So we might see a push up to these areas, retracement a bit, and maybe depending on the DXY, we target these liquidity levels over here. Yeah, we have this target and we have this target as well. So this is for scalping purposes. Of course, if you want to go, if you want to visit higher time frame, so we can certainly do that. So let's see the 1 hour. Yeah, so this was all a liquidation process. We liquidated all these positions buy here and buy here. This push to the upside. This has been a fake out, indicating that we may go up, and then we liquidated all these positions, targeting the real supply zone over here. So this is for the 1 hour. Of course, if we continue with this momentum, these are the targets that we're gonna look for, and then continue our upward trajectory over here. So yes, yes. So as you can see, we are in an upward channel. We liquidated these positions. It's always important to be patient. So once these positions were liquidated, we targeted the real supply zone, the real demand zone, and then we started to push to the upside. So let's see gold. So gold has been on a downward trajectory since Monday 11, and that's the first time in 4 weeks. As you can see, we've been on an upward movement for quite some time, approximately from February 14 until March 8. So yeah, this is the first time in 4 weeks that that we see a downward trend in gold. Of course, we are confined in this channel. It's all gonna depend on the dollar. So when interest rate, when the CPI and inflation data came out, of course, investors realized that cutting interest rate is not in the near future, and we saw the decline in gold from these levels, from these historical lows. Gold is making historical highs. Excuse me. So yeah, we might face some dynamic rejection over here from this trend line, and we are forming a pattern of flag. So yeah, I think there is one more push to the downside, and then maybe we can go up as long as we hold this historical high that was created on December in the Asian session, if you all remember. So as long as this high is maintained, as you can see, we touched it and then we pushed to the upside. So as long as this high remains, we are bullish on gold. Let's jump in on the US 30. So yeah, US 30 is respecting US 30 is respecting this pitchfork. As you can see, we had uh, one touch, two touch, three and four, and it is respecting this trend line. Of course, the momentum, as you can see, has changed. So we had strong momentum maintaining the price above the median, above the mean, and retesting and testing this dynamic resistance. Uh, we pushed to the downside a bit and then rebalanced quickly. And now we are trading in the lower channel of this pitchfork. Um, this could indicate a decrease in momentum, a decrease in the power of the move. So yeah, as long as we are in this channel, we're gonna continue our upward movement. There are some demand zones over here that have not been mitigated yet, so we might see a push to the downside before resuming and breaking away from this pitchfork that have been uh, containing the price for quite some time. I think it's from January till this day. It's 3 months approximately that price has respected this channel. Um, yeah, this is regarding the US 30. I think there is some demand level at these points that have not been touched yet. I think we're gonna visit these levels at some point in time. But for the time being, as we are maintaining this support level, this dynamic support level from 2 standard deviation from the midpoint, I think we're gonna continue our upward trend. Of course, this is all dependent on the data coming out this week and next week, and we have some big and important data, so be careful. We're gonna jump into the US oil. So after the news of KSA cutting production barrels by 1 million per day, we saw some upward movement, plus the conflict that is happening in the Red Sea. Um yeah, could drive the price of oil higher. Of course, oil is highly cyclical, meaning it's dependent on geopolitical pressures. It's dependent on seasons, and it's dependent also on reserves and production. So we should be careful regarding oil, maybe scalping, but clear levels are not there yet. We have this resistance over here at 83.5. If we extend it back, we can see it. Yes, as you can see, maybe we are entering a stage of consolidation at these points. So as you can see, we are confined between these levels and these levels. For the time being, oil could not break $94 per barrel. And I think if we break above it, we can see some high prices for oil. But for the time being, we are confined in this range. So yeah, uh, one thing to keep in mind: the conglomeration of BRICS and the fighting going on could influence oil prices because, first of all, it's dollar dominated, so it is affected by this, and we can see it being used as economical weapon. So keep in mind these information are important. For the time being, we are confined in this space. I usually recommend not to trade in markets that are tending to move sideways. So after this big push to the upside and retracement, as you can see, we are in a range, and this can be difficult to trade. So thank you for tuning in, and we will see you next week with another market update. Thank you.